We continue to take a look here at some of the names on the move, and so we welcome in Schwab Network contributor Sam Vadas is here with me, taking a look at NXP Semi, a name to watch. Some of your thoughts here?
Yeah, under pressure this morning, Nicole, by about 1.5% or so, off the back of, interestingly, what has been an earnings beat. And so, as we know, there's been a lot of scrutiny, obviously, on the semiconductor space as we've started to hear from these names, even though we've seen these beatings as far as estimates are concerned. We have certainly seen some softness in some of the stocks off the back of that. So here we are. Here's the chart of what we've seen as far as the reaction really falling off a cliff off the back of the announcement. Quite a vertical move, as you can see there. Let me run you through the numbers we saw as far as Q2 earnings. Adjusted EPS of $2.72 a pop, so that was a beat. Revenues of $2.93 billion. And what seems to be the concern here, according to some of the media reports and the analysts that are being quoted here, is to do with perhaps the third quarter forecast that's less bullish than some had been expecting. There is a lot of commentary about the fact that they are contending with a bit of a turbulent industry at the moment because of the fact that they do rely heavily on the auto sector. That actually accounts for more than half of their revenue. So that seems to be a bit of a worry right now as far as the demand is concerned in that space. There also seems to be a bit of a concern around some of the other areas, weakness in communications and the infrastructure segment as well, amid some of that broader market softness. This is according to Reuters as to why actually we did see a 6% drop or so in that second quarter revenue. So sales have come off, although they did beat some of those expectations. As I mentioned, when it comes to the guidance, they're looking at $3.05 billion to $3.25 billion in the third quarter, which is lower than a year ago. So the analysts were expecting 3.08. The CEO is upbeat though. They're saying that the outlook reflects in part an emerging improvement in the company's core end markets. But, you know, as I mentioned, Nicole, the semiconductor space, there's been a lot of positivity around this, but, you know, maybe it's just the run-up that we've seen in some of these stocks. I mean, if you look at this from the April lows, it's up, 8% or so year to date. So, you know, this is obviously a reaction that we've seen across the space when we've heard from these earnings.
And look, if you plug in Taiwan Semi or NVIDIA or the SMH or the SOX, you're going to see the same chart. They all sort of overlay over each other, hitting highs.
Exactly.
This group has been incredibly strong on a wild comeback. The question is whether or not the demand will be there and whether or not they can continue this. But the run-up has been great.
Incredible. Yeah. That's right. And, you know, you've got the likes of Micron as well, you know, to your point, as far as sort of the broader space is concerned. You know, so maybe it's a function of the fact that we have seen, you know, such a solid run up, a lot of positive sentiment behind this, that, you know, with any sort of mention of a slowdown in sales or a little bit less in terms of expectations with regards to the guidance, that this could take a bit of a hit as far as falling short of estimates when it comes to the stock price. So perhaps that's what we're seeing today. But yeah, down 2.6% in trade. But I mean, you know, as far as some of the price target expectations here, I think, you know, the average analyst price target is for around 247 or something. We're at 222 right now. So there is some view out there of some further upside for this one.
Yeah, I mean, technology overall has been seeing records. You know, that and utilities have been two really great, strong sectors. And one area that's been driving the up part of the story today are home builders. You're looking at GR Horton in particular.
Yes, which hasn't been the case as far as the overall trend when you look sort of year to date for, you know, a company like this, for instance. But yes, we have actually had an earnings beat as well. So we saw EPS of 336 versus 292 estimates on revenue of $9.22 billion. So America's largest Homebuilder. Seems like investors are cheering that earnings report today, sitting up a very healthy 10% or so. So if you look under the hood as far as what got us here, it seems very interesting as far as the analysts are saying that it really looks to be a case of the fact that these buyers are taking advantage of some of the deals and the incentives coming from a lot of these companies. But there's also a view out there that that is not always good news, particularly when you look at the financials for these companies, as far as the margins are concerned. No doubt it's helped juice things up this quarter, but as a lot of the reports are pointing out, the housing market isn't in the best shape. And actually, some have pointed out that some of the expectations as far as listings, about 26% of listings saw price cuts in June. Then you had that about 38% of price cuts in July. So obviously, if these home builders are cutting some of these prices, no doubt that is attractive for some of these buyers. But in the long run, I think some of the concerns seem to be around that this could be an impact on margin pressure, hitting their bottom line in the future.
Look, I mean, they said they're going to continue sales incentives. They want, those will remain elevated.
Yeah.
They want to increase those over the fourth quarter. They want to see new home demand continue, but there have been affordability constraints. I mean, that's certainly one. The price point is high. Consumers are cautious. Mortgages have not really come down much. So that's the big picture. However, you're still seeing these names jumping and leading the way because they are topping the lowered estimates, right?
Yes.
So these names are leading the way. D.R. Horton, we also had Pulte, Lennar. Those are some of the winners on the S&P.
Yeah, and I mean, double-digit gains today as far as the reaction from investors this morning, Nicole, quite remarkable. But as you say, I mean, they're using their margins really to compete when it comes to some of those deals, and that seems to be some of the concern here. But that worry right now doesn't seem to be reflected in the price reaction as we're seeing this morning.
Last but not least, Coca-Cola. Cane sugar is
a can of sugar.
Still a story. They are going to have that. What's the latest?
Yeah, I mean, it just goes to show, as far as the headlines are concerned, that consumers are continuing to swallow the price hikes that we've obviously seen from a company like Coca-Cola. It does look like shares under pressure somewhat today, 0.9% lower in trade. But let me run you through the numbers as far as we got from Coca-Cola Q2 earnings. So adjusted EPS of 87 cents versus 83 on the street, revenues of $12.5 billion. So that actually was versus the 12.59 billion estimates. So obviously we've seen the fact that consumers, as I said, are willing to still pay for these price hikes. It's interesting as far as you look at some of the regional sales, which markets actually did better than others. It does look like European sales managed to offset some of the weakness that we've seen in other markets. The company did actually talk about foreign currency posing a bit of a headwind to some of the revenues, because obviously we've seen the dollar on the ropes a bit, on the back foot for most part of this year. So no doubt that is impacting things, perhaps speaks to why we've seen things being offset in other markets as well. But they have been talking about, in some of their accompanying commentary, about facing a challenging consumer environment. There's one thing with the macroeconomics, Nicole, when you talk about, people pulling back on their spending, maybe not going out and buying that soft drink, maybe sticking to water or tea or whatever, save some of the money. But it's also got to do with, some of the more health-conscious consumers out there. Obviously, we've seen a big crackdown as far as the MAHA campaign is concerned. Trump now talking about the can of cane sugar, whether that is more healthy. But, as you have this sort of more health-conscious consumer, thinking about, obviously we've seen a big run-up in some of these diabetes drugs as well, whether this impacts a company like Coca-Cola as far as, the soda segment is concerned.
Yeah, and Pepsi, by the way, 1 month up about 12%. So watching those drinks, and the president had noted that there would be Coke with cane sugar. Then Coca-Cola came out. This was about a week ago or so, where they were saying, maybe we'll consider a version. It was very vague, and it turns out that's what we're going to get, some sort of version. You know how they have all different things: Coke Zero, Coke Cherry, whatever. There'll be Coke with cane sugar for those who want the real deal. There's apparently not even enough sugar to have Coke have real sugar. So there you have it, all the Cokes. Thank you. Good to see you, Sam Vadas. A good look at 3 important names there.